Imagine the exact moment your financial life changes forever. One morning, you check your investment account and realize your money earned more in a single month than most people make at their full-time jobs. This is not a miracle or a stroke of luck. It is pure mathematics in action. There are 3 specific wealth milestones where your path to riches suddenly shifts into a much higher gear. I spend a significant amount of time analyzing compound interest and figuring out why so many people stay trapped in the cycle of living paycheck to paycheck. If you are tired of watching your bank balance grow at a glacial pace, you need to understand exactly when your assets start working harder than you do. Before we break down these life-changing turning points, let me ask you a question. What do you actually picture when you think about creating real wealth? You might imagine someone in an expensive suit or a lucky person who inherited a massive fortune from a distant relative. However, the truth is far more surprising than that. People who build genuine wealth are not always the ones with the highest salaries or those taking the most dangerous gambles. They simply understand a concept that sounds almost too basic to be true. Your net worth does not grow in a straight and predictable line. It behaves like a small snowball rolling down a massive mountain, starting off slowly before transforming into an unstoppable force. There are 3 specific stages on that journey where the momentum becomes so powerful that your entire financial reality shifts. These figures are not just random guesses. They are mathematically proven thresholds where compound interest moves from being a theory to a life-changing reality. The first major tipping point arrives at $100,000. The second occurs at roughly $650,000. Finally, the third milestone that completely rewrites your future happens when you hit $1 million. Here's the most fascinating part about these specific numbers. Most people assume that reaching $100,000 means they are 10% of the way to becoming a millionaire. They are completely wrong. And this misunderstanding is precisely why so many people quit before the real magic starts to happen. Let me describe what most people think the journey to wealth looks like. They imagine a perfectly predictable path where every dollar saved moves them exactly $1 closer to their goal. If you save $10,000, you think you are $10,000 closer. If you save $50,000, you think you are $50,000 closer. It sounds logical, but it is actually the opposite of how money works when it is invested correctly. The reality is much more exciting, but it demands a level of patience that our modern world rarely encourages. We live in an era where dinner arrives in 30 minutes and movies start in 3 seconds. The idea of waiting years for a result feels almost impossible to many people today. But this is exactly what separates the wealthy from those who spend their lives wondering why they can never get ahead. When you invest properly, your money does not just sit there doing nothing. It begins to work for you by earning returns, and then those returns start earning their own returns. This is not a get-rich-quick scheme. It is the fundamental math that has built fortunes for generations. The secret is mastering compound interest, which is often called the 8th wonder of the world. Those who understand it can build incredible wealth, while those who do not will work hard for their entire lives for money that earns next to nothing in a savings account. Let me break this down with some real-world numbers that will likely shock you. Imagine you decide to invest $500 every single month. That is about $125 per week. It is not a small amount, but it is achievable for many people by cutting back on eating out or unnecessary subscriptions. If we assume a conservative annual return of 7%, things start to get very interesting. It takes approximately 7 years and 9 months of consistent effort to reach your first $100,000. 7 years and 9 months might seem like an eternity when you are just starting, but time will pass regardless of what you do. During these initial years, most of the money in your account comes directly from your own pocket. You are doing all the heavy lifting while compound interest is still getting ready to play its part. Out of that first $100,000, about $46,000 is your own cash, while $54,000 comes from market growth. That is a solid start, but it probably will not change your life overnight. This is exactly where most people make a fatal mistake. They look at the slow progress and feel discouraged because the returns do not look impressive yet. What they fail to realize is that they have already finished the most difficult part of the entire journey. You have built the foundation for everything that follows. It is like learning a new skill where the beginning is frustratingly slow, but your progress eventually explodes. Remember, the goal is $1 million, and you just reached $100,000. Most people think they are only 10% done, but compound interest changes the game entirely. To keep track of your own journey and learn more strategies for hitting these targets, make sure to subscribe to Billy Finance right now. From this point on, your money starts working significantly harder than you do. Those investment returns that seem small during the first 8 years will start to snowball in ways that will leave you speechless. The next milestone is $200,000. Here is the fact that blows most people away. It only takes about 5 more years to reach that second 100,000. Think about that for a moment. It took nearly 8 years to get to the first 100,000, but only 5 additional years to double your wealth. Now you are 13 years into the journey with $200,000 in the bank. The math is officially shifting in your favor. Out of that $200,000, you have contributed roughly $78,000, while the other $122,000 is pure profit. Your money has been working quietly in the background, and suddenly the gains are becoming very real. This is why that first 100,000 is so vital. Even though you're only at 200,000, you are much closer to $1 million than you think because growth is exponential, not linear. It is like pushing a heavy rock up a hill. The start is exhausting, but once you hit the peak, momentum takes over and the rock starts flying down the other side. Now we enter the phase where things get truly addictive to watch. Compound interest is now the primary engine of your wealth. By the time 18 years have passed, you hit $400,000. Your personal contributions total about $108,000, but your balance is $400,000. This means nearly 3/4 of your wealth was generated by the market, not your own savings. You are now earning roughly $28,000 every year just from your investments. Think about the fact that you are generating over 1/4 of your original milestone every year without doing any extra work. The best part is that this process does not require you to sacrifice your entire life or live like a monk. Imagine putting away $500 every single month, a move that for many is simply a matter of being more mindful about where their spare change goes. This is not about giving up everything that makes life enjoyable, but rather about making small, steady decisions that eventually snowball into something incredible. The individual who embraces this concept and takes action will create significant wealth, while those waiting for the perfect moment will likely spend their lives wondering what might have been. It is honestly a bit of a tragedy because we are looking at simple arithmetic, not some complex secret or insider knowledge. The momentum picks up speed significantly once you cross that $400,000 threshold. By the 22nd year, your portfolio is likely hovering around $600,000. This leads us to a massive turning point where your lifestyle truly begins to transform. Owning $650,000 in productive assets is a reality most people cannot fully grasp until they see it for themselves. Consider that the typical household in the United States brings in about $78,000 a year. Most people earn that by trading their precious time for a paycheck, dealing with long commutes and the stresses of a corporate environment. However, with $650,000 invested wisely, an 8% return generates that same level of income without the office politics. Think about the scale of this for a moment. An 8% annual return on $650,000 equals $52,000 in passive income. While that might not fully replace a high salary yet, it is a substantial amount of money that completely alters your financial reality. If you wanted to fully replace that $78,000 median income, you would need roughly $975,000 at that same 8% rate. For most families, reaching $650,000 is a huge psychological win because they realize their money is finally doing the heavy lifting. They can still choose to work, using their salary to pour even more fuel on the fire while their net worth grows through the power of compound interest. It is the ultimate scenario where your financial cake keeps growing even as you take slices out of it. This is the stage where you can finally start to breathe a little easier. The constant worry of a financial crisis does not vanish entirely, but it shrinks significantly when you know you have $40,000 to $50,000 coming in passively every year. Losing a job is no longer a disaster, it is just a minor setback. A health issue does not mean total ruin because you have options that are simply unavailable to those living from one paycheck to the next. Beyond the security, your entire perspective on risk evolves when you have a solid foundation working for you. You can finally afford to take the kind of calculated leaps that could skyrocket your wealth even further. Maybe you have always dreamed of launching a business but feared losing your steady income. When your investments cover your basic needs, that entrepreneurial dream becomes a viable reality. Perhaps you want to learn a new craft or head back to school to increase your long-term potential. Without the crushing weight of monthly bills, you can invest in yourself without needing an immediate return. Or maybe you just want to see the world while you are still healthy enough to climb every mountain and walk every beach. When your capital is working for you, you stop delaying your life until a retirement age that might never come. This is the true definition of wealth. It has nothing to do with flashy cars or trying to impress the neighbors. It is about the freedom to say no to things that drain you and yes to the things that fulfill you. It is about crafting a life based on your personal values rather than the balance of your bank account. Now, you might be worried about inflation and whether these figures will hold their value over time. That is a valid concern, but a smart strategy accounts for this naturally. If you earn 8 or 9% annually and only spend 6 or 7%, the remaining growth allows your portfolio to keep up with rising costs. Your total principal grows, which means your passive checks grow right along with it. You are not just hanging on, you are actually increasing your purchasing power as the years go by. And do not forget about the additional safety net of Social Security benefits. While you should not rely on it as your sole plan, it will likely provide a helpful boost when you reach eligibility. With the average benefit currently around $1,900 per month, your total financial picture becomes even more comfortable when combined with your personal investments. But everything changes once you finally cross that legendary $1 million mark. Reaching 7 figures is not just a milestone on a screen, it is a total psychological shift. Hitting that $1 million target usually happens around year 29 of consistent investing. At that moment, a massive wave of relief washes over you. You realize all those years of driving an older car and skipping expensive lunches were worth it. It is like finishing a grueling marathon where the reward is the ability to relax for the rest of your life. You might not feel like a billionaire, especially with inflation, but you will feel completely validated. You have proven that building real wealth is not just for the lucky or the born rich. As an average person with a disciplined plan, you have shown that the system can work for you. This milestone unlocks doors you never even considered before. With $1 million invested, you start seeing opportunities everywhere. Maybe you can now fund a small startup or finally get into the real estate market. Your net worth becomes a key that opens previously locked doors. The fear of going broke fades into the background. Even at conservative rates, you can generate $40,000 to $50,000 a year, ensuring you will never be left without a safety net. This is a level of liberation that is hard to explain to someone who has not felt it. However, there is a major difference between those who stay millionaires and those who move even higher. Some people get comfortable and stop the very habits that brought them success. That is a massive error. The truly wealthy understand that the first million is just the beginning of what is possible. From here, the math becomes almost unbelievable. To reach 1.5 million, your portfolio only needs to grow by 50%. In a strong market, that can happen incredibly fast. To hit 2 million, you just need your money to double, which historically happens every 7 to 10 years. Moving from 2 million to 3 million only requires a 50% gain. Going from 3 to 4 million takes only a 33% increase. Each new million becomes easier to attain if you keep your discipline. This is why the wealthy look at time and money differently. They see every dollar as a seed that can grow into a forest. An expensive $200 dinner is not just a meal. It is the loss of hundreds of dollars in future growth. I know some of you are thinking that this sounds perfect on paper, but what about a market crash? What happens if the economy fails right when you need it most? These concerns are completely valid, and they are exactly why having a diversified portfolio and a conservative withdrawal strategy is so crucial. Here is a perspective on market downturns that many people fail to realize. If you are consistently investing over several decades, those market crashes actually help you build wealth at a much faster pace. When prices drop, your regular monthly contributions are able to purchase many more shares than before. When the market eventually recovers, as it has done throughout history, those extra shares you picked up during the dip become incredibly valuable assets. So those are the 3 major tipping points that transform your net worth from a slow crawl into an unstoppable financial force. The first is $100,000, which is when compound interest finally wakes up and starts doing the heavy lifting for you. The second is $650,000, the point where your capital can generate enough passive income to fundamentally change your life and security. And the third is $1 million. The moment you realize you have basically won the financial game that most people do not even know is being played. The math simply does not lie. Even if this journey requires more patience than our fast-paced society usually appreciates, you need to stick with it. Start investing consistently today, because 29 years from now, you will either be thanking yourself or wondering what could have been. Thank you for watching, and do not forget to subscribe to Billy Finance for more financial insights. We would love to hear your thoughts, so please leave a comment below. Goodbye for now and see you in the next video.